Warm greetings to you, accountants. This is Masscom Studies, Masiachengo Commercial Studies, a visual commercial studies classroom, which I will be presenting some areas which I feel might be very helpful for your examination. So today I'm going to concentrate on accounting for revaluation. Okay, so I will show some journal entries, and I hope you are taking down notes, which I hope will help you answer the questions properly in the exam. Okay, here we start. I think we can start now. Let me try to use my slides. Okay, I think this is the first example that we are going to do today. Okay, let me try to get a pen from this side so that I can try to show a little bit of workings on your part. Okay, let me get a red pen for a teacher. This is an asset that we have. Okay, in the asset we are saying motor van, which has a cost of how much? $5. I tried to use a lower figure so that you can follow. A provision for depreciation is how much? It's actually 2, and obviously the carrying amount, our CA, the carrying amount or the net book value of the asset becomes what? 3, which is simply 5 minus 2, we get what? 3. This asset was revalued to $12. Okay, we want to see how we go about this one. Okay, this is the journal. All right, this is our journal that we want to use for this lesson. Okay, our journal. All right, so let's try to follow now. All right, so we are actually saying the motor van is an asset. So an asset, when an asset increases, it means we are supposed to debit the asset. So what do? You compare the cost of the asset. Okay, you compare the cost against what? You compare the cost against the new value. So what happened? It actually the asset increased from $5 to $12. This is an increase of how much? $7. So an asset is a debit balance. To increase a debit, we credit. So we credit with how much? 5 with $7. Okay, so let me, as a takeaway again, it's actually 5 minus 12 minus 5, then we get what? 7. Then our provision for depreciation, this one we are expected to write it off. Okay, so you write it off. We are giving it a new value, so you need to write off the provision for depreciation. How much is the provision? The provision in this case is actually $2. So what do? You write off $2. Provision is a credit balance, so for us to write off a credit balance, we debit. So what we do, we go to the debit side and we write provision. How much? $2. Okay, and then when you want to determine the amount that is to be shown in the revaluation account, you compare the net book value or the carrying amount of the asset against the new value of the asset. So you can follow this funny pattern that I'm creating for you. Okay, so we are going to compare 3 and 12. So this was an increase in revaluation, and revaluation, these are credit balances, so we increase the revaluation account. So we credit with the difference 3 and 12. The difference of 3 and 12, this will give us what? A 9. So we credit the asset like the revaluation account. So this is how we go about it. So I think this is very clear. Maybe to highlight some key areas that you need to do when you are concentrating with the asset, you compare the cost against the new value. When you want to calculate the amount to be shown in the revaluation account, what you do, you compare the net book value of the asset against the new value of the asset. Okay, then what you do to the provision for depreciation, you write it off to cancel it in the books, since the asset has a new value. Okay, I think you are good to go. We can proceed to the next question, which I want you to try, but I have this answer for you. Okay, let's do the question again. This is a motor van with a cost how much? $5. Smaller figures for understanding. And provision for depreciation in this case is actually $2. So our net book value is actually our carrying amount, right? Our carrying amount in this case, we are going to say cost minus the accumulated depreciation. So we are going to say 5 minus 2, we get what? The net book value or carrying amount of $3. And this was revalued to $1, right? Then we want to prepare the journal entries. Okay, these are our journal entries. All right, our journal entries. Okay, just bear with me, my funny handwriting. Journal entries. Okay, we have got debit and credit. So what we do is we compare the asset, saying we compare the cost against the new value, and this is to affect our non-current asset, and our cost is 5 and it has decreased from 5 to 1. This is a decrease of 4. So an asset is a debit balance, but to effect the decrease we are supposed to credit like this. Okay, I think you are following. Then when we want to record the amount in the revaluation account, what do? We compare the carrying amount, which is the net book value, against what? The new value of the asset. All right, we compare the net book value or the carrying amount against the new value of the asset. So this is 3 to 1. This is a difference of 2, and this is a decrease. So revaluation, we are supposed to factor in the decrease, which is this one. Okay, I think you are actually following whatever is taking place. Then we agreed that what do we do with the provision for depreciation, the accumulated depreciation? We write it off. Okay, we write off the provision for depreciation. Writing off, this has a credit balance. So to write it off, what do? We debit the provision for depreciation account, like this one, and then we are done with the account. I think it's making sense, right? And remember, we need also to complete this one. We prepare what we call a revaluation account, and a revaluation account is, in simple terms, we are just taking our journal entries. Okay, we start with this one. You see the revaluation account was credited. In this case, the revaluation account was credited with how much? With $9. So we credit revaluation with $9. I think you can actually follow. Revaluation was credited with how much? $9. Okay, and these are the details for this. All right, then we need to move on to the second journal entry. What did we do to the revaluation account was debited with how much? With $2. Okay, so we move on to the debit side of the revaluation. We move on to this one. There is a revaluation, there is $2 for the motor van, like this. Okay, after you're done, you are expected to balance off this account. You find where there is a big amount. This is the big amount, $9. We write $9 both sides. We write $9 both what? Sides, like this. Okay, then there's a shortfall on the debit side, and this we write this one, and we transfer this amount to the capital account. We transfer this one to the capital account. Right, when we are done with transferring this amount to the capital account, it means we we record this one as a profit on revaluation, and we are supposed to credit our capital account. So this is a profit on a revaluation account. Okay, I think you were following on this video, and I hope you understood everything. Okay, but as a few takeaways, which I think is very necessary, NB, if revaluation results in a decrease, okay, if a revaluation results in a decrease in the carrying amount or the net book value of an asset or the non-current asset, we recognize the decrease in the P&L or our income statement. All right, but nonetheless, if there is a credit balance in the revaluation account, okay, that is, there is a surplus in the revaluation account for a non-current asset, recognize the decrease, okay, in other comprehensive income, okay, to offset the credit balance. So I think this is the presentation that I wanted to do for you, and I hope you were understanding and you were following. And my contact details for more information, for corrections, for support, and so on, I think you can actually contact me on my number this is +263536682, or just send an email. I think on this one we can actually communicate. I remember to subscribe to our YouTube channel, and this is it's entitled Accounting with Sergey, and I think you receive the videos regularly. Thank you. Bye bye for now. Wish you all the best in your exams. All right, thank you. Bye bye.